Let's say you found some trading setups that work, but you don't know how to size them properly. You don't make enough on the trades that work. You lose too much on the trades that don't. If you could just lose less on your worst days and on your worst trades, if you could just make more when you win, then you could achieve your goals as a trader. Well, in this video, we're going to help you with that. We're going to share how a top prop trader on our desk sizes his positions so you achieve maximum account growth. Stick around. You're about to learn finally how to properly size your trades. Hi, I'm Mike Bellafiore, managing partner of SME Capital, a proprietary trading firm located in Midtown Manhattan. I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of our trading videos produced for the trading community. In this video, you're going to learn how to properly size your positions for maximum account growth. This video will also teach you how to develop a system to properly size, the template the top prop traders use to properly size on our desk, whether to be rigid with your sizing rules or not, to sit and to wait and to sit and to wait for the best trades to just develop, and how to increase your position sizing properly. So stick around and learn how to size your positions like a top prop trader so you can grow your trading account. Hey, if you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out our free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right corner of your screen. That's going to open up the free registration page in a new window, so don't worry, you're not going to lose this video. So go ahead and do it now before you forget. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Asked to talk a little bit about sizing with you guys. So just, I'll talk about general approach and then kind of my approach more specifically. And obviously everything's a bit personal, like, everything in trading, it's all personalized. So, but generally, the idea is you want to have a system that allows you to sort of think outside of like the dollar amount in general. So every day you're going to have a certain amount of risk to allocate, and you either want to say, okay, I want to risk 30% on these setups, 15% on these setups, whatever it may be. Or you can think like I have 10 risk units, I want to risk 3 risk units on this, 2 risk units on that. So you're basically just trying to kind of get out of the idea of saying I want to risk $100 or $200, because that, basically you want to get to the point where you're not thinking too much about the dollar amount of any trade, because it's a good way to keep your psychology, in check. And as you size up, if you're thinking about, every time, you lose a little bit more money and you start thinking about the money, it can turn into all these different mistakes. So for myself, I'm kind of like a feel type trader. So I do a lot of scalping and probing with orders and a lot of trading around. So it's hard to always say like, okay, I'm risking, 30% in this setup from this level to this level. And it's not quite as black and white. Where I'm sure some traders, actually I sat next to a trader before who would literally just wait for his perfect level and just watch the tape, and then he would just kind of be all in at that point and risk till whatever, and that worked for him. So it's, like I said, it's kind of a personal thing. For me, I build in the idea that things might take a couple tries. So if you have, let's say you have like an A setup and it's, you really want to go after that, I might say, okay, I'm going to risk, maybe half my day or 40% of my day on this if it all lines up correctly. but it could take 3 or 4 tries to get that. So I'm not just going to be first try, all in size, and then just give it as much room as as I can, because I don't think I'm that perfect with my entries. So that's something to think about. You kind of want to leave in room for a few tries, and that's often it takes more than one try. So part of something that like set me back initially was thinking too much in, okay, I have to risk this much on this play. So instead of saying, okay, here's a good place where I might be able to risk a certain amount, I think, okay, I have to risk 30% of my stop. And so then I'm risking actually more than the play really called for, because it might start to give me some signs that it's not going to work, and instead of just cutting it, getting out, I'm like, oh, well, I'm risking 30%. So you give it more room. So like there are these little traps that you can fall into by overthinking, or thinking too much about the size or your exact system, because trading is just so fluid. You don't want to be super rigid in your approach, right? Everything has to be kind of flexible. Nothing's going to be perfect 100% of the time. But at the end of the day, you want to kind of look back and say, okay, how much did I make on this trade, and where was my risk once I found that entry? Where was my risk, and was I big enough? Was I risking enough size? Because that's how you're going to be able to like push it as a trader. And also you want to kind of think outside of, okay, this is the exact share size that I want. I always want to be in 500 shares or 1,000 shares or 2,000 shares, because you might be able to find a place where you can risk a penny, or you can risk 5 cents, 10 cents. And if you're just thinking, okay, I just want to be in 500 shares, you're just kind of giving away that free risk you had there, So that might be a place where you could be in 5,000 shares, because it was, that was the proper risk right there. So basically, I'm trying to say, there is a certain amount of flexibility to it when you're entering, exiting, and that's kind of individual in terms of figuring out what you like. But obviously, you want to have in your mind those general concepts of, for me, it's like 30%, 30 to 50% on an A setup. Like I said, it kind of varies, and that's depending on if it's A or like really A plus. B setup, I would say 15%. So I'm kind of trying to think in that around, and then I basically have everything else is like a feeler to me, and to that I don't really want to risk more than like 5%, and that might not seem like a lot, but as you size up, that obviously the dollar amount goes up. But for me, I do a lot of feeler trades where I might risk 1% or 2%. I'm really not worried about the size at the point when I'm getting into those trades. I'm not worried about the risk or my exact stop necessarily. So that's just my personality. Like I said, other people do it differently, and you guys just have to experiment with that, figure out what kind of works for you guys. Any questions so far? Obviously, feel free to just jump in if you have anything.
Do you have your A setups and your B setups organized at the start of the day, or do they emerge during the day, or what's the general sort of?
Yeah, so generally, that's a good question in terms of what my plan is and how it changes throughout the day. Usually, I have a focus of 2 or 3 stocks that I think could develop into A setups, right? So I have them. They're already, in the forefront of my mind, and I'm going to watch them and kind of try to pick out the A or the B setup in them. So I'll have maybe a couple different scenarios that I might be interested in seeing if they play out. So sometimes they don't play out, and then I'll have I'll have another list of 5, 10, 20 different things that I'm continually looking through, just seeing kind of what develops throughout the day. And then another thing that's actually part of that, I think, is that obviously feeler trades, you get into them hoping that they turn into that a setup emerges that is a B or an A setup, right? So a lot of these feeler trades I put on is just if I want to keep something on my radar more closely, I might get in, just 100 shares and just let it float around and watch it. But then going through the day, that setup can go from a feeler trade to a C to a B to an A setup, as it shows me everything that I need to see. So I kind of generally structure my day in that kind of format. So if something really is sticking out as a stock with really high opportunity, then I'll know to focus on it, and generally I'll give it B or A risk like pretty quickly. But other things that just take longer, yeah, definitely they can develop from there. All right, so let's see what else I write down.
I have one question real quick.
Yeah.
So you've been trading for a while, so the difference between a B and an A setup, is that something you've looked at like from a statistical perspective over a sample size, and you say, hey, like this breakout trade works 60% of the time, but this new gap and fail works 85%? Like, is that how you
I mean,
did it?
a little bit, but it's more like I can assign a probability to that setup just kind of from experience. So I might, look at something and say, okay, I bet this has 50% chance of doing something, and I can risk, X amount, and I can probably make this amount. So I'm assigning a probability and then also like a risk reward, right? Because it's not just, it's always the two together. But yeah, I mean, the more you back test, the more you kind of figure out what are the subsets of different trades, what does a A versus an A plus really look like. At the end of the day, it like comes down to there are a few, this is what I think, and this is what other people have said, like there are a few really moments each day that kind of make your day, and you have to take advantage of those. So it's finding those moments, and that trade might go from an A to a B to a C to a no trade in 10 seconds because you missed it or something, So now it changes the risk reward and the probability, right? Because you're not going to, if you miss a dollar move and you want to chase it in, it's not the same risk. You just added a risk to that trade, or a dollar risk to that trade. So what do? You have to either size down a lot and then just trade it as like a C setup now, or forget about it, or wait till it pulls back and maybe it's a B trade. So these things are just constantly flexibly moving with a lot of different parts. So in general, sizing to me, it's like it's kind of a weird topic because everyone wants you to be very systematic about it. And it's, I will say that the more I try to systematize it perfectly and think like that, I just get too caught up in thinking about it like that, instead of, it takes me out of the flow of my trading, which is really what you want to be in the flow, and you want to find those few moments where you're just pushing it. So yeah, that's how I would kind of go with that one. As you kind of, sizing, the advantage of having a system that you've kind of thought out now after I've, talked crap about it, the advantage is that it really will help you like incrementally size things up. And you don't want to go from trading 1,000 shares, on like a setup or whatever, $1,000 of risk to 10,000, 10,000 shares, $10,000 of risk. It has to be like, 10% more, 20% more. It just kind of really gradually stepping it up. And, that's what a system is there for. It's to give you that like backbone of, okay, now I can just try not to think about the money and think about just the trade. But there are definitely like some hurdles that might occur. Definitely for me, like as you size up, you take larger losses. So you have to have that risk kind of there for you already. Like your stop should probably already have been moved up, in my opinion. Then you really have that freedom to step into that size and maybe make a little bit of a mistake because, generally your heart's gonna be beating a little bit more. You're gonna be thinking a little bit more about the money instead of just focusing on the trade. and that can lead to certain mistakes that you might have like thought you already corrected or something. You know, like if you're in a bunch of size and it starts going against you, you might be like, oh, you freeze or something, instead of just being like, all right, cut it like you would normally do. So you have to be careful not to kind of, you know, you always want to be pushing your limit, but not way outside of your comfort zone, right? It has to be just like right on the edge, and it's like it's a very fine balance. And if you can get that down, that's, you know, in general, a really good skill for trading. Just kind of finding those balances.
When you scale up, do you look more of like the profit locked or more of like the order flow trying to reverse against you? Like you want to lock in profit first, or hey, I just wait for this order flow to reverse against me, just when I scale out a bit?
Yeah. I mean, it's hard to. Are you saying like if you're up a bunch of money in a position, you know, are you going to treat it differently, or is the risk different?
Instead of like trying to lock in the profit first, you're just waiting for the tape to change.
Oh, yeah. I mean, generally you want to, you know, with sizing and entries, also there are rules you want to have for exits, right? For taking profits at a certain point in the trade. But those should be rules based on your playbook and your setup, right? So you should know that trade kind of decently well. You want to say, all right, what's your target, or what do I think is possible? And then maybe what am I going to do in between there if it's kind of not showing me that, or if it's not working. So for me, like I said, I trade in and out a lot. So I'm always kind of taking off risk as I'm making money. I'm just taking some off, almost just to feel it. Like if it's really easy to take off risk, like if it's really easy to get filled on the bid or on the offer when you're long or short, that tells you something about the strength of the stock. So then you might change a little bit of your target even. You might think, okay, well, this might go further than I think, you know? So it's, like I said, it's fluid, and I'm not trying to like dodge the question, but yeah, you have to figure that out within your own like plays, I guess. So it's part of that.
Is there a rule of thumb where you take profit, you start taking profit after like maybe 5 hours or 4 hours?
Oh, yeah, I'll take profit after like 1 hour or half hour. Yeah, I mean, because like I said, I'm not all in, all out. Here's my entry and here's my exit, and I'm just gonna put the order on and then kind of walk away, and like whatever happens, you know. Like I don't personally work like that. I have tried that in terms of sizing up, or you know, certain setups where I want to say, well, I really want to capture this whole move, so I'm just going to risk to here and then let it happen. Whatever happens, happens. But in doing that, I personally like shut off to a lot of information that's coming to you in the market, right? So it's not like, this is kind of a difference between like playing poker or like blackjack and trading, you know? Like when you're getting dealt cards, you have to make a decision every time on that piece of information. You have to do something. But in trading, it's like there's always, every single moment you can make a decision or not make a decision. But every single moment is information to gather and to try and assess, you know, what might happen. You don't want to get caught up in the minutia of like, oh my God, it ticked up 2 cents, it went down 5 cents. But you'll feel what's normal within a move, and you'll start to feel what is when something changes character, right? So if you're in something and it's working for you, and then you really feel like, oh, something just changed, you know, it's almost just like a feeling that you'll develop from experience. But you can kind of think, oh, well, that changed. Why am I gonna ignore that information and just let it go against me all the way back to my stop, you know? But that's just my personal opinion. Like, again, this trading, everything is kind of, you know, to each their own. And at the end of the day, it just kind of matters. You know, does it work for you, and does it help you get results, right? Yeah. So anything else?
When you were kind of learning, when you were sort of training up, right, did you find that you got to like a level of practice after like a year or 6 months or 2 years or something where it all just came together a lot more, and how much did practice actually matter?
I mean, definitely yeah, I'd say there's a lot of little points along the way that kind of feel like, oh, something is clicking that wasn't there before. But at the same time, there have been times where, I've felt like, oh, I got it figured out now, right? This is easy. And that's the kind of point you don't really want to get to, right? You have to remain in the mindset that you'll never like fully master it. So there's always something else you can learn. There's always more experience you can gather, more information you can gain, and you kind of just always have to be in that like student mentality. That definitely helps you stay out of like overexuberance or especially after you're doing well or something like that, and then you definitely want to look back and say, what did I do well during this period of time to like let's say you're on a winning streak, you want to say, okay, what am I doing well right now? Like inside of the markets, outside of the markets, preparation-wise, the whole thing. But though, and you can take key takeaways from there. But for me, like I don't want to ever think that, oh, that's it, I got it, I got it figured out. Yeah. But I mean, yeah, there are definitely times where you just think like, maybe even like you read something and it's like really insightful. And for me, like I think psychology is the most important part. And so I just read a lot of trading psychology, and I would just read one book like 20 times, and you just gain these little things each time, and then once you can relate it to your own, your own trading, your own personality, then you kind of have this like, oh, I get it, I see what's happening. I mean, all along the path, there's going to be those moments, and I'm still like trying to have those for sure, right? Anything else, you guys?
How much of you talk about in and out, like couple tries, kind of experienced that already a little bit. Mm-hmm. That obviously reacts on volume, and so how much commissions or anything does that even affect what you do sizing wise?
Yeah, I mean, like you want to be. I mean, this is the thing about commissions. You're going to lose the money on the trade, or you're going to lose it in commissions, right? So if you're saying, let's say you get into something and you think you can risk 10 cents and it doesn't, and it goes against you, you get out. And then it goes a point the other way. Would it have been worth it it wouldn't have been worth it to stay in there to try and save, the commissions. So I don't really think about commissions. I just think of them as a cost of doing business. I don't think of them when I'm making trades in any way. And obviously like they add up when you're like trade like I do, which is like a lot. They definitely add up, but the way I view it is that, well, that's just part of risk almost. You almost like compound that into your risk. So taking 3 tries, maybe you could have taken one and given a little more room and it would have worked the same, right? Like let's say there's like a 50-cent range and you're trying to risk 20 cents when you could have given it 50 cents and it still would have worked. And you do it 3 times, so you just lost 60 cents instead of 50 cents, right? So like those little things are very like specific to the stock that you're trading and to the mentality of that you have personally. Like it doesn't bother me to get in, get out of something over and over again when I'm trying to capture 3 times whatever. You obviously don't want to get too into it. Like you should probably starting out have a rule of like 3 strikes and I'm out. Like that definitely prevents a little bit of that and keeps you out of trouble when you're kind of getting mixed up with, is it a play? Am I over trading it? Yeah, I mean, yeah, it's easy to kind of mix up the real signal with just the noise.
Psychology-wise, what's the rule that has the biggest impact on you?
Psychology, what is the best rule that I have? For me, it's like don't have an opinion really. Like if I just stick to that rule, my trading is a lot better. If I don't, and it seems weird because it seems like, oh, you have to know what's going to happen, or you have to have some idea of. But for me, if I just sit there and wait, like it'll just show itself. Like the right thing will come to you. But if I come in and say this is definitely a short, I'm going to short it. Like this is going to be a big trade. Then it's really easy to misconstrue any movement in the market as setting up for that trade that you really want to see, right? So like it's this constant overcoming your own like bias. So for me, if I just come in without bias, then I might make a little bit less than I would have if I had like really had an opinion and came in and had that like crazy confidence and just like went all in and crushed it. But I'm not gonna have the 3 days leading up to that where I come in and it's not quite ready and I lose, you know, more than I wanted to, and this trade wasn't even there, right? So for me, it's always trying to stay objective and unbiased, you know. I think that's psychological rule.
Are you trading like multiple setups, like fluidly, or are you sticking to just a few?
At this point, yeah, I'm definitely trading, you know, different setups, different, you know, like assets, like options, futures, stocks at the same time, and I'll have different kind of strategies that or different plays in each one that I'm trying to, you know, run. But I'm fluidly taking, I'm always like trading something. So like this setup, I might be trading over here, but it's just, you know, it's a longer term approach and I'm thinking something different. And then this turn, and I'm trading with less size because I don't really want to think about it or watch it. And then over here I might be scalping something because it's super in play and it's just, and I know there's so much opportunity and action there that I can just make the spread and I can, you know, I can just pull out some cash flow. And then there's, you know, certain days like today, like I went over to the futures account and shorted some, you know, S&P futures because I thought that today was a different, you know, risk off type of day. So all of those are different setups, right? Like, but they're all in my playbook over years of seeing them happen over and over again and developing them. But it's not, you know, it's not like every day the same things come up. So like that S&P trade today, that comes up once a freaking like 6 months, right? So, you know, like I said, for me, coming in, staying objective, unbiased, even in terms of what I'm looking for, in terms of what plays I think are going to happen today. Because it's easy to come in and say, oh, well, I'm best at this trade, so I'm going to look for this trade every day. That trade might not be there. It might be there for a month at a time, for 2 months, you know, and then it might go away for 3 months. So to me, you have to have a playbook of, you know, a decent amount of trades and know which ones to pull out on which given day.
Do you find yourself scanning like a lot of charts to like sort of get ideas or news flow?
Yeah, I mean, I'll do like, you know, screeners. So I'm just looking for stuff that's overbought, oversold, in range, right? I think those are kind of like my 3 main criteria. Either something's way overbought. Why is it overbought? Is it fundamentally good? Is it not? Is there a possibility to short it, to buy it, to, you know, or is it something really oversold? Is it fundamentally good, bad? Why? And is something in a range that might break out, you know, either way.
So you're looking to the fundamentals of the stock as well?
I mean, I'm looking at like a story. Like I generally want just like a general sense of the story and of the perception of it in the market, right? I'm not going to like dig too deeply and say, oh, well, their cash flow is, you know, positive quarter over quarter or whatever. Like, I mean, it might be helpful to have conviction, like for longer term stuff, and maybe that's something that, you know, I can add later. But yeah, for me, it's not super relevant. But definitely, you want, like, you know, trading all these marijuana stocks. You want to have an idea of the story behind it. What's the potential of this industry? You know, who's interested in it? Why is there institutional money? Obviously, it's pretty crazy. It's pretty early in the whole sector's you know, lifeline at this point. It's very early in the infancy. So you want to be thinking of that bigger picture when you're trying to conceptualize those trades, right? It's just something to have in the back of the mind. And the more that I'm able to kind of, you know, get those themes and those stories correct, the easier it makes trading, and the more you're able to stay out of bad trades, because you're not doing things that go completely against what is the kind of the obvious or the more you know, free-flowing state of the market, I guess, if that makes sense.
have correlation actually ever had a big impact negatively in terms of because I size each of my trades, for example, on different instruments correctly to take a different risk, but because they are all correlated, they actually understand the risk.
Right.
Have you had that experience?
Yeah, I mean, if you're trading like some, like we'll just take the pot stocks because it's the most recent thing. Not really recently, but in the last week they were all kind of trading together, right? So you might get in a situation where you're trying to have a little bit of all of them, but then they're all moving exactly the same. So you might have too much risk for what it was really, the one setup. It's really just the one setup across 3 stocks, right? It's the same play. But now you're full size in all of them, and then they all go against you. You can't even get out of them fast enough, right? So I remember that happened to me a few times. I think last year, the shipping stocks, there were 4 or 5 of them, and I was fully sized into all of them, and they all went against me at the same time, and I couldn't even get out of them, quick enough. So it's definitely something to be, mindful of, what is the correlation of whatever. The different things that you're trading, right? But generally the things I'm trading are not super well correlated, or they're inversely correlated. Well, I guess that makes it, if they're inversely correlated and I'm short one, long the other, and then the same thing can happen, right? So oftentimes I'll be trading, the S&P and the VIX at the same time. So it can be easy to get in a situation where you're kind of trading back and forth, and then they both kind of start getting away from you, and you're like, oh shoot, I'm in too much size of each of these, and they're correlated negatively to me. So
Yeah, something to think about. Yes.
So in that case, if you have something that's correlated with each other, but you see a setup in one and not in the other, will you and if it's an A+ setup, will you maybe short the other one so then you can add more size?
Hedge it with the other one?
Yeah.
I mean, sometimes. Sometimes I will trade the VIX and the SPY against each other, but only when not if it's an A+ setup, only if it's a setup where I'm not sure what's going to happen, right? Because I don't understand the point of hedging out your A+ setup, right? That's your best play, and if it's an A+ setup, it means you're already pretty confident about it. You're already pretty sure of it. The only time I would do that was if I'm waiting for something to develop and I just want a piece of it, and I'm not sure yet, but I think something will happen. Then I'll I might hedge half of it, with something else. Or you're trading options in one and it gets overdone, but you don't want to take the option off. You might take the opposite position and hedge it out with stock or something. Or if you're overnight in an option and then something crazy happens after hours, you can hedge out in the stock. But usually I don't do it in that way going into it. Not that that's necessarily wrong. Some people probably, it probably eases their mind a little bit, and they can take more size and lose a little bit over here and make a whole lot over here. Probably nothing wrong with that. Or if there's this was a trade that a couple days ago, when the IWM was relatively weak and the SPY was going up, you could have shorted one, bought the other, and looked for the spread to come in, because they're usually much more correlated. So you can kind of arbitrage the spread in that case, right? So it's similar.
When you started out, when you were developing, did you typically take size off too soon or too late? And how has that changed as you've grown to where you are now, would you say?
Yeah, that's a constant back and forth for me, actually. It's kind of interesting. So yeah, starting out, I definitely probably took stuff off too soon, because starting out I was just very risk averse or risk conscious. So I never even let stuff go against me, really. I never really even lost too much money, but I just would constantly be taking profits all the time, here. And the interesting thing is I have periods where I trade that way, and I'll take profits, and I'll just have go on a good streak, of a winning streak, because I'm just so kind of risk averse. And then I'll look back and I'll say, well, I should have probably made more here. and then I'll think, okay, now I'm going to try and hold these certain setups or size up these plays or trying to think of the ways that I can get better at that. But sometimes it's like one step forward, two steps back, because you start adjusting the little things that actually put you on that streak in the first place, right? So you start thinking, okay, I have to hold things longer. I have to hold size longer. I have to this. When really you're just as well off just getting in twice as much, taking it off the same place, right? It's the same thing. Like you get in the same size and you're trying to catch twice the move, or you can get in twice the size and catch the same move, or take a little bit more off, right? There are different ways to not affect your trading style that much that I've tried to like develop more into my trading so that I can always be consistent and not have those times where I'm sizing in, trying to hold for like a massive trade, and then it's just like choppy, and it just kind of, it's not that it ruins your results or anything, but it I don't know, it changes.
It increases your win rate or whatever. Right?
Yeah, it certainly messes with it. Like increases the volatility of your returns. It definitely does. Like very distinct things to your P&L curve.
I've been trying to like balance, like we see some guys come and talk to us about like they have this larger thesis about what's going on in the stock, and then trying to size into it, and they're trying to let that play out. And so I'm trying to find this balance between what I think is going to happen to play out and not getting like too greedy to it. Like I've been round tripping a ton of stuff, like that I get big on and then get. I hold it, and it's like it didn't play out to the full extent that I was expecting, but it worked.
Right. I mean, like when I look back, I ask like, what would I have rather made a little bit less but been more consistent, or made it a little bit more and just had more of a roller coaster ride, So it's very personal, like, because some guys they're just so gung ho about wanting to make X amount, or like wanting to catch this whole move. Yeah, just home runs. For me, like I'm just never that confident in my in what's going to play out. I just think it's inherently unrealistic to think that every day you can come in and say this is exactly what's going to happen. I know this. Even if you're a very good analyst or whatever, like there's so much noise and so much volatility in the market that I'm better off, for me, just taking my money as it comes, and like I said, trying to adjust other things like trading bigger on the front end and taking off some, or if it's really a setup that I'm seeing it work out really well, then adjusting it kind of mid setup and saying, okay, this is the 10% or 5% of the trades that I'm in that really run away, that really work out for you. But it's never that like 100% of my trades I just take off too quickly. There's some impossible to determine mixture in there of ones that I take off really perfectly because they just went like half a point in my direction and I took some money out and now they're not working. So I'm gonna lose all of that opportunity if I just have a black and white approach of
everything's so different.
Yeah, I mean, definitely. Like it's just you have to figure out what makes sense to you and go from there.
Good question. I've had a lot of trouble like adding size to trades that are working. I feel like a lot of the times where I should actually be just taking some of the position off. Did it just take time for you to really understand like your playbook and all the nuances and possibilities that could happen within your playbook to like really know where to add size?
Yeah, I mean, like I said, there are a few moments each day that are like defining this is the size moment, right? There's like 2 or 3 in any stock you're trading, right? If you're really trying to manage risk and like have kind of asymmetric returns in terms of risk reward, you have to find those moments where it's like this is the time to add size. So that moment is not any time the stock starts working for you. Like a stock will work for you half the time, and just in a basic distribution, like half the time it's going to work, half the time it's not. Anytime it's working for you doesn't mean it's going to like just go from there and you should size in completely. So a lot of times, instead of trying to hold everything and add to it and size up and like, do this whole, just get bigger and bigger and bigger as it starts working, I'll take some off and I'll look for I'll look for really like the second move, like a retracement or a nice consolidation, like something that's really definite to where I can be like, okay, well now I've made some money in this because I've taken some profits, whatever. Now I can just kind of sit back and wait for a little bit to even size up three times the size that I was in before. But it depends. It's very like market and stock specific, I think, too, because certain stocks just trend well, certain markets just trend well. You have to know if you're in a trend day and you have to get all your size at once and you have to kind of hold it, or if it's just a very range-bound, mean reversion type market where if you try and add to anything, it's not going to work. So like those markets, do occur. Those stocks do occur. So figuring out where you are in that cycle is like really important, right? You can't just think that, oh, I'm going to add to every trade that starts working. I mean, I'm not saying you're doing that, but in my opinion, that's the easy way to get frustrated because you're like, oh, well, I was just up money and now I added, now I'm down more than I've like. Why didn't I just take my money off? But like I said, that's definitely a personal thing. Anything else about size?
Were there any A or B setups that you took today where you sized in, and the show could you maybe just briefly explain how you sized in and show us maybe?
Yeah. Just pull up NBEV, NBEV. All right. So this had like a conference call thing today, where they were announcing some sort of product or something. I put the conference call on a little bit late, so I didn't even hear what they said, like what the announcement was. But I heard the end of it, and I heard that it was nothing. Like nothing. They didn't really say anything. So basically, I was assuming that this was like a sell the news situation, because yesterday the stock was getting sold off, and it ran up right after they announced that this was going to happen, that they had this presentation today. So it was, I don't know where, I think it was like on the lows yesterday. Was that yesterday? Yeah, that's yesterday. It was like on the lows or under view up, and then they announced it, or maybe it was right over view up. Yeah, like right there. And then they announced it, and it just like went up the rest of the day. And then came in today, it's gapping up, it went up. So I'm thinking, well, if they don't really say something like incredible, it's not gonna, it's just gonna go back to where it started. So I was listening to the conference call, and then right when it ended, it just felt really weak to me. Like it was very weak. But before that happened, I really wasn't trying to get in any size. I was just like doing my feeling around, right? So I was putting up a lot of kind of as it like spiked up. I wasn't too scared of like it just running away and running me over, and I wasn't trading very big. So I was really trying to feel the nature of that stock today. Like, so I might have thrown up like 100 shares every like 10 or 20 cents and seeing what happens. If it started to really run and really rip, I would have just taken like I would have had like a 5% of my stop loss, right? It would just been a feeler trade where nothing important. But just getting into it, I could feel, okay, it's not that strong up here. There's definitely sellers. So from there, basically the whole morning, I'm just kind of putting up offers, putting in bids, like putting up offers, trying to kind of feel out the range, trying to feel out like the character of the stock. Is it just getting hit and then, are they buying it back up? Are they trying to hold it under view up, over view up? So it felt pretty strong, but it also kind of, it just didn't seem like real to me. It was just kind of like forced. It just felt like a lot of shorts getting out, spiking it up, and then it just fading away. Shorts getting out, spiking it up, and then it fading away. So the characteristic of it just had me kind of skeptical of the whole up move. And plus, like I said, my thesis from yesterday was, well, it's probably a short if they don't come out with anything crazy. So once the call happened, I think it was at 11, right? So right there, I was listening to the call, kind of trading it, still doing the same thing. I wasn't gonna like take a big shot at it just on like some word they were saying, unless I saw some crazy volume happen and it go one way or the other. So I was trading it in that same manner, just right, shorting on the pops, buying back on the dips, And then right when the conference call ended, it was at like 11:30 or I think, or like 11:20. It was somewhere. It wasn't very long, so it ended somewhere in there. And then it just felt like they couldn't spike it up anymore, right? So there were definitely a lot more sellers, and every single level was really, really hard to get through. It was just like every single level they couldn't really lift it. So from there, I just started selling. You know, I'm trying to think how much exactly I would be risking. So I didn't put on that much size, but it was more size than I had, you know, at any time in the day, right? So I was like, okay, well, this is the actual trade that I'm looking for. So I think I was in like 5,000 shares or something, and you know, it's just started holding lower, and then once it broke, I was kind of looking to add even more on the next bounce because that's, you know, this thing could go a lot lower.
So you didn't cover anything. So you were in the initial feelers the whole time, and then you added there, right?
Yeah, well, the initial feelers I was taking on and off until.
Oh, you were taking them on and off, okay.
Until the conference call was over, and I thought that, you know, it could actually kick off more of a move. And then I was in like 5,000, I think, and then it started selling off. I mean, I think I took off like into that first, you know, real red bar. I probably took off like 25% of it, and then was basically gauging the next bounce, right? So I was saying, okay, is it gonna hold below that level it just broke, which was like 850? And it was a similar type of bounce that it couldn't really stage, you know, on the last, you know, right after the conference call. So I tried. It was hard to short because it was like SSR. It's really hard to get into, get filled, and that tells you something though. If it's hard to get filled when you're trying to short it, it's probably, you know, your position's in a good situation. If it's super easy to get filled, like when you're trying to short anything that's on SSR, you should be a little bit skeptical of the situation. So like the fact that I couldn't really fill that much, and I was trying to like fill a lot more, gave me a little bit more conviction to kind of hold it and see what happens if it melts down or not. I didn't trade the rest of it perfectly. I definitely started taking it off at like 8 and then like 780, you know, through it, and it went all the way down to like 730 or 40. But that was the move I was looking for. That was kind of the way that I had planned it out, drew it up, and the way that the sizing made sense to me. I didn't want to be in any real size before this news was out there and not out there, right? And then after that, you know, I was looking to short pops. I mean, that's a big move. You have to kind of give it time to digest. You have to give it, you know, more time to set up. It's still before 12, and that's the time of day where things can just kind of do whatever they want. They can go like drift up on air. They can go sideways or whatever. But a stock like this, it's just there's a lot of people in it. There's a lot of shorts in it. So I was kind of figuring we'd get a bounce to short, and we did. So I think I sized in to the next bounce at like 850. Took some off at like 8. I was basically trading that range right there. You know, same kind of thing. But I had more size now because I had seen this whole move, right? So I knew that the sellers were pretty much in control. We're well below VWAP. I thought maybe we could go back, test VWAP. I don't really want to see that, to be honest, because, you know, that's just annoying when you're in like a certain amount of size. And that would have been a pretty big bounce. That would have been like, you know, a good point, over a point, like bounce on an $8 stock. So, you know, I was really kind of adding with, you know, a little more conviction on the way up, and then covering into the down moves and trying to hold. And then I was holding a core, you know, of which I was really hoping that it was just going to kind of roll over the end of the day. It definitely had a chance after it put in that consolidation most of the afternoon. It definitely could have rolled over, but you know, this is not how these things trade recently. So if it was another stock, like a weaker, like a kind of a shittier company, it probably would have played out like that. But there's just so much hype in this space right now. It's very hard to keep these things down. So, yeah.
So as you're feeling these things out, kind of like feeling where you want to add or you want to take it off, how do you, let's just say this, like you're adding into VWAP there and you're giving it room and you're, you think it's still working out. Is your like max pain point, is it based on the play, or is it like you see your P&L and it's like you got to you got to cut it down? Like how do you manage that part of it if it starts going against you?
I mean, I'm not even looking at my P&L, to be honest. Like,
Okay.
so.
It's based on the trade.
Yeah,
Yeah.
it should be based on the trade because you never want to trade your P&L, right? You want to know where you're at generally in terms of like the risk you've allocated to this trade, but I knew that like you could do the math pretty quickly in your head. I mean, this amount of shares, it's this amount against me or whatever. Like you always have a feel of where you're at in a trade, and if it's really going against you, like I don't have to look at my P&L to know. Like,
No,
just
I understand that,
get
but
the
like
fuck out.
But you could look at the history of the last couple of days in these stocks and see like
Yeah.
maybe this is about to bust off.
Of course, yeah. You can
You know.
you can say, oh well, that. I mean, you have to at some point like hand over the control and be like, look, I'm trusting something here, right? You have to trust that selling after that news event was real, and that there are probably going to be sellers that are trying to sell the bounce. And if anything, like it went against me, and it I got probably more. I probably added too quickly against me, right? Like because I wanted to be in it for a potential end of the day like sell off. And I thought this thing could go back to 6 or 5, which it could have. And but I knew it's not going to just, maybe 5% of the time it's just going to go straight up. And that's probably only if some news comes out or something, right? Like it's going to give me a chance to get out to like break even or take some size off. It's going to give me some wiggles, and that's what I'm like, I'm managing my position with those wiggles, right? So I'm like, I might just keep adding as it goes against me. Not out of control, not like I'm down way too much. I was like always in the profit, and I was just kind of risking what I had already made. So I was never really even down money in it, but I knew I didn't want to give I didn't want to give everything back and then a bunch. But worst case scenario, it would have ripped up, gotten back to like 850, 860 would have got to VWAP. I would have been, down a little bit, and I would have been able to add more or decide that this is not for me.
Yeah, I think it's hard, like especially when you're tooling around with sizing. It's like you know that you want to be in something still, but you screwed up your sizing too early, and now you're at the point where like you're not supposed to be losing like a shit ton on like one trade, so you gotta like somehow manage out of that situation.
Yeah, you generally don't want to be in situations that you have to massage it too much. Like it doesn't feel good to be in those situations, and it's not really good trading. Like you don't have to trade like that. They do, obviously it happens, like just because, like I said, stocks are just random kind of, they wiggle, they move against you more than you want to, but I generally try to avoid that situation by like, if I'm up to a certain size and I feel like I'm stuck, like I feel like, oh, I can't take it off anymore because I'm down too much or I'm in too much size. I like notice that as a tendency of my own, and it goes completely, counter to how I usually trade. So it's really bad. So I just notice that, and I think, okay, well, just take half off, like just to get a clearer picture. Even, you can always put it right back on in 1 second if you want. But even doing that, you'll like fake move your average up, right? You'll still be down, but it'll like look a little better. So just like little mental tricks that you have to like figure out for your own style, personality wise. But yeah, for me, like, I just don't like that. I don't like to be in those positions where you're oversized too early against you. So and generally as I was, a newer trader, I got in those situations a lot more because you always think a little too fast. Yeah, you always think like 1 or 2 steps ahead, but not in the way that you should. You always think time. You always like speed up time in your head, right? You think like, oh, it's going up. I got, everything happens quickly, and the more you can slow it down and think and be really, really patient and just wait for it to get to your levels, not worry if it doesn't get there. That's when I personally trade the best, and it's least stressful, which is what it's good, which is what I want for me, right?
I guess if you ever get to the hoping stage, if you've done something wrong.
Yeah, you definitely want to look at that's not a strategy for sure. So you want to keep that in mind. But yeah, like I said, sizing, you might have situations where it's like you want to risk 50% of your day. You might want to risk 100% of your day. I don't know. Like it's all dependent on your playbook, and so you have to just really figure out what makes sense to you. But there's a lot of flexibility and fluidity in it. But you should definitely think about those like basic levels, those basic tiers. How much do I want to risk of my stop on this, and how does it fit into my overall playbook?
Hey, go ahead and click our subscribe button so you don't miss any of our trading videos produced for the trading community. And please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, trade well.